Welcome to Keeping Up with Trends. This is Federated Zach, Senior Trading Strategist here at CMTrading. We're joined with your host, Sergio Davids.
So, for it, in our ongoing series of educational clips, we've had quite a good response. Previously, we spoke about stocks and Forex and how to trade them. So, today I thought we'll bring it all together and talk about indices, the collection of all stocks and markets, and, it drives the economy. So, I guess to start off, what are indices, man?
So, indices are pretty much, they're really a representation of an exchange.
Right.
Indices in of themselves are just basically a barometer of an exchange. So, for example, you have the JSE, you have the NASDAQ, you have the New York Stock Exchange. So I'm going to start with the New York Stock Exchange just because it's more familiar to me
Sure.
and its components, even though I do know some stocks on the Johannesburg Stock Exchange. So what happens is that an exchange is set up as a really intermediary of allowing companies to be represented to the public and having the ability for the public to invest in these publicly traded companies. So it's just a um, medium of a marketplace where these companies could list their stocks, okay, or offer stocks to investors, and it's in a public forum. So there are regulatory bodies that require the particular exchange to meet certain requirements. And each exchange has its own requirement as to what kind of companies can list their stocks and offer their stocks to the public. So, traditionally speaking, New York Stock Exchange, the largest exchange, I think, in the world, has certain criteria of how much assets you need to have in hand, how many sales you do from quarter to quarter, etc. And that's why it started. And there was this spinoff of the NASDAQ, which the NASDAQ came around in the late 70s, early 80s,
Right.
where it allowed smaller companies that were in high tech, like Microsoft back in the day, like Apple back in the day, um, and allowed them to be able to not meet the criteria of the New York Stock Exchange, but meet a lower criteria, but nevertheless still be able to offer their stock to public. And that's what a marketplace is. That's what the New York Stock Exchange and that's what the NASDAQ or the JSE is. Now, underneath that, okay, there are certain replications or certain, if we want to see how the stock market is doing just in generally, we set up an index. Now, an index could really be a representation of the broader market. Okay, so you take banking stocks, you take oil stocks, you take high tech stocks, you take financial stocks, healthcare, everything, conglomerates, all kinds of different companies, and you set up a certain index. And that's how you get the Dow Jones, which is a particular index. Okay, so the New York Stock Exchange is the actual exchange, but the index that represents the broader market, okay, is the Dow Jones, okay, or the S&P 500, which is the Standard & Poor's 500 largest companies in the United States, irrelevant of what they do. So, these type of indices are weighted depending on the type of companies that are mostly represented in the index, right? So if you have like 15 or 20 high-tech companies and you have one or two oil companies, where it's going to be much more affected by how those high-tech companies are doing, and that will affect the index as
Yeah.
well. There are different classification of
I mean,
indexes. There is the Russell 2000, for example. There's many, okay? There's high-tech indices that are just high-tech. There's bank indices that just kind of gauge how the bank stocks in general are doing. But that's as a really, robust kind of answer of what an index and what an exchange
sure.
represents.
I mean, you mentioned earlier, South Africa has its own, index, which is Johannesburg Stock Exchange. I mean, there's even a Nigerian stock exchange, Dow
But I
Jones,
wonder if that's the
FTSE, Nikkei.
exchange or is that the index? I mean, the JSE also, I guess, represents a certain
Yeah,
index of the stock exchange as
of
well.
the stock exchange, yeah. But what I've always liked about, indices is that, instead of just trading one stock specifically, right? Instead of just maybe just chasing Apple, by trading, the index and the index, you could trade a collection, of those stocks. which I always thought was quite appealing. And like you said, some of these indices are being pulled, one way or the other by some major companies. I mean, just look at the
So,
FANG stocks,
I
and
mean,
what
generally
they
speaking,
do.
it doesn't work like that. Generally speaking, it doesn't work that you have one company that's going to be moving something so adversely um, in the marketplace. So that is just usually not going to be the case,
Right.
um, because the broader market is the broader market. However, there are instances where the broader market does affect the specific markets, or vice versa, right? If Apple has a general issue that's systemic and might affect the rest of the market, well, it's going to affect the whole index as well. So
Yeah.
that has happened, or positively or negatively. Okay, that has certainly happened. But ostensibly, at least for the U.S. markets, it's one. They affect each other. Okay, and you could trade them against each other.
That's interesting. And I mean, just on that, right? What are some of the benefits of trading indices?
So the thing is that you are anytime you put in a certain position into any asset, you're taking a risk, and also not doing anything, you're taking a risk per se, right? Um, but in when you're trading a general market, you're kind of dispersing your risk as opposed to just trading a certain stock. Okay, because certain times there'll be a situation where the stock is very weak and the market is going higher. A case in point over the last, I don't know, the last month or so is Apple. Apple has been trading lower and not has been making any new highs recently, and hasn't been making any new highs recently, as opposed to, let's say, like Facebook or Microsoft. And really, it's something outside of it. Okay, it's antitrust laws that they're being sued by the government, and they're going to have to go into court for, and that's why the stock is depressed. Now, the news will only come out today, but it's been a situational um, context over the past month and a half, and you see the stock has been selling off. So those people that are familiar with the situation, are familiar with the story, understand what it is, and understand why the stock is down. But for us, we'll only see the stock down today, and we'll see, oh, wait a second, the news just came out, right? And it's been down. Now, from a technical viewpoint, it's irrelevant, right? Um, the point of this is the greater market is going higher, Apple is going lower. Apple is now relatively weak compared to the greater market. So, um, up until the point that I knew what the news is, I didn't really care, right? And I still don't
Right.
really. I just see that the stock is weak relative to the greater market. So when the market does sell off, well, guess what? It's Apple that's going to be most depressed during that time, and the relative strength or relative weakness of it is much greater than the broader market. So it'll be the first one to actually sell off.
Hmm. That's quite interesting. So, what advice do you have for anyone out there who, wants to tackle stocks and trade indices in 2024?
So each one is a benchmark towards the other. So we discussed Apple on the downside. Let's discuss J.P. Morgan on the upside. J.P. Morgan hitting
Yeah, record
$196
highs.
a share, record highs,
It's actually the
exploding.
entire banking sector. It's crazy.
Is exploding because of the interest rates and because of
Right.
inflation, and they're the ones that benefit from this type of market. Now, I remember in 2009 when J.P. Morgan was trading at $6,
Jeez.
$6,
Wow.
$6.
Wow.
It was on sale.
For
And
one of the
JP Morgan
world's
is too large to fail.
biggest financial conglomerates, that's insane.
Right. JP Morgan is really too big to fail. It's that
Right.
type of company. If JP Morgan fails, you could pretty much say the United States fails. That's the strength of JP Morgan. So on that side, JP Morgan has been outperforming the market. But you see that the New York Stock Exchange has been trading together with it. So there's a little bit of a correlation between the bank stocks and the Dow Jones, as it's making new highs, this is also making new highs. Now, the point of this, I'm saying to you this, is that they trade together. And because they trade together, they give you opportunities to trade them together. That's what I'm trying to say. Sometimes the stock go ahead of the indices and the indices
Yeah.
catch up. Sometimes it's vice versa. Sometimes it's the indices that are going higher and then it's the stocks that are catching up. So whatever type of market, you also always have to look as a benchmark. That's why I love to trade something like Bitcoin, something like the stock versus its index, as
Yeah.
opposed to trading something like Bitcoin, because Bitcoin is only momentum and action
Yeah.
kind of environment,
And extremely, extremely volatile.
and extremely, extremely volatile. Now that's great for people who are day traders and
Yeah.
are in and out and playing just those, 10 cents, 20 cents, a dollar. I mean, in Bitcoin's case, maybe $100,
Yeah.
But alternatively, I mean, I'd rather be in a position where I understand what the market is doing as opposed to just using it as a video game and, and just like saying, hey, there's some reason to this, um, and understanding what the climate is, and understanding the temperament vis-a-vis the stock and vis-a-vis the index, and then taking advantage of it.
Awesome. I hope anyone out there has gained some great insights into how to trade indices. And please, please tune in for next time where we'll be chatting all things commodity related.